Corporate conversations now. HLE Glascoat will acquire 70% stake in the heat exchanger business of Kinam Engineering Industries. This part of the strategy to strengthen its position further in the specialized process equipment. But do note it reported a weak set of Q1 number and EBITDA margins was at a 4-quarter low. To discuss this and more, we are joined by Harsh Patel and Aalap Patel, who are the executive directors at the company. Harsh and Aalap, good afternoon. Thank you for joining us on CNBC TV18. Aalap, let me come across to you first. Before I speak to you about the numbers, the acquisition, it's a 70% stake that you are getting into this company, but it is to be done in 3 phases. I wanted to understand why such a long procedure to acquire a company, by when do you expect to finish it, and what kind of synergies are you looking at here?
Sure. So, hi, first of all, thanks for having us. So as you rightly said, we have recently announced the acquisition of a 70% controlling stake in Kinam Engineering Industries. Kinam is a leading manufacturer of heat exchangers for the chemical and API sectors, where HLE is also a dominant player. Now, this transaction is actually going to happen in 2 phases. So in the first phase, we are acquiring a total of 70%, but in the first phase, we will be acquiring about 35.5% for a consideration of approximately 80 crores. In the second phase, it is proposed that shares of HLE of value that is equivalent to about 77.5 crores will be allotted to the promoters of Kinam. So fundamentally, the reason for the transaction happening in 2 tranches is because part of the consideration will be paid in the form of equity. So that's exactly how the transaction is structured.
Okay. Can you just give us a sense in terms of, Mr. Harsh Patel, what would it probably mean in terms of consolidated margins? Because what I can see is that your margins in the previous quarter for the company fell to around 11 to 12%. It was a multi-quarter low that it came in at. But the company that you're acquiring has significantly higher margins. What then would the blended picture look like?
Right. Thank you for having us again. And thank you for asking this question. First of all, let me come to the Q1 margins of HLE Glascoat on a standalone basis. See, right now the margins are affected mainly due to some very conservative accounting practices that we have. We account for revenues only after all the contractual obligations are finished. So basically, when finished goods are dispatched. So while we are seeing very high production levels at the plant, the dispatches of finished goods are pushed back a little bit, because of which you see low margin. As we continue dispatching the finished goods, you will see our margins recover. Coming to your second question about Kinam, so overall, I think we will recover our margins, and then Kinam has a slightly higher margins. So we will end up anywhere between 16 and 19% as on a consolidated basis for FY20.
Okay, so you're saying Kinam has slightly higher margins. So Kinam has margins of 16 to 18%, right, for the year, and that's something that can continue, or is it something that you can build on? Can you eke out higher margins from Kinam? Harsh.
Currently Kinam has margins of around 25% on EBITDA levels, and we have margins.
Okay.
Last quarter was historical low, mainly because of some delay in dispatches which has happened. And this is not delay on account of production delays, but delay just because of how the orders were spread out during the year. So on a over yearly basis, sans Kinam will anyway end up between 16 and 18%, and Kinam will continue to have higher margins at around 24%.
Okay, got that. The one thing that I think the street is a bit concerned about, Harsh, is your working capital days. So there seems to be a little pressure over there. Your receivable days have gone up, your inventory days have gone up as well, and your net working capital days has almost doubled to 140 days in Q1. Why are you facing this kind of pressure, and do you think this is something that can continue in the second half of the year as well?
Again, thank you for asking this question. Basically, this is again linked to what I just said. While the production levels are high, some dispatches have not happened. So because of that, the inventories have gone up, and hence the receivables have also gone up. But all these high production levels that are happening right now will finally result in revenue in Q2 and Q3. So on a year basis, you will see the numbers coming back to the normal levels that we have had over the years. And this is purely a function of how our orders are spread out during the year. So there is nothing, the numbers will come back to normal.
So does that mean you can do the margin band of 18 to 19% in FY24 that you had guided for earlier? What do you want to give as an outlook in terms of revenue growth as well?
In financial year 23, we are expecting to end at a revenue of around 1100 to 1150 crore. And on India, we are expecting a margin to settle anywhere between 16 and 18%. And our Germany business, Thaltech, will be around a 40% margin for FY23. That is what we are guiding right now.
Okay. Aalap, just before we let you go, wanted your thoughts on the order book for the coming 3 quarters. You did acquire business worth around 291 crores in Q1. What is the run rate that we could expect in the next 3 quarters? Are you probably going to do 300 crores of business or more in the coming quarters? Leave us with that guidance.
Sure. So as you rightly said, we have had a very healthy Q1 in terms of order booking. We have had an inflow of close to 290 crores, and that leaves us with an order book of around 550 crores as of the ending of Q1. So while the order book is going on very well, both in the glass-lined and non-glass-lined segments for us, I think that we have also seen a lot of positive developments or positive results of our business development push in different geographies like US and other countries in Europe which are not traditionally the stronghold of Thaltech. So just as an example, as on the end of July, we have been able to have an order book of close to $9.5 million in the US market alone. So we expect the current run rate to continue, and we will have enough orders to meet our targets of 1100 to 1150 crores of top line for the current year.
Okay, all right. Harsh and Aalap, all the best, and thanks a lot for joining in and speaking to CNBC-TV18. That's HLE Glascoat talking about the 70% stake that they acquired in the heat exchanger business of Kinam Engineering Industries and what this means as, for their strategy going forward. Let's do one thing. Let's take a quick